AMC does have another big catalyst next week, and it's definitely something that can drive a lot more buying power into the stock, just like we did see this last week. But here in this video as well, I do want to go over all of the data around the AMC short squeeze. For those of you guys that are new, or for those of you guys that just want a wrap up of where we currently sit, that's what this video is for. So let's get into it, guys. Hit the like button for me if you're buying, if you're holding, if you're just excited about AMC. Hit the like button for me. Consider subscribing to the channel. Make sure to check out the pinned comment down below. Follow me over on Twitter, and if you guys want access to all of my trades, the buy and sell alerts is linked down there as well. So before we jump into the big catalyst next week, or potentially big catalyst next week, and what that will do for the price action of AMC, I do want to go over the Ortex data, the technical analysis, really what you guys need to know on a technical basis, in the Stonko tracker data, because we've seen a lot of activity last week, and this may not have been fully hedged for on Friday. You can also see hedging that happens on Monday as well. So I do think we're in for a continued rally. I wouldn't pay attention to, or saying that, I mean, you guys really shouldn't pay attention to any of the bears that you see. Sure, they could push the stock down. Does it look very promising for them to do that right now? Does it look very likely? Not really. So let's get into, first off, the technical analysis, what happened last week. So we know the stock was going down pretty much all of last week until we did really hit Friday, and that's what we called out here on this channel, was the end of the week bounce, and it played out exactly how the data was telling me it was going to play out. We've seen that 19.10% pop on Friday, up 0.82% in after hours. So that's right there, a strong move in after hours. Usually if you see a stock that's up 19% that is going to come down the next trading day, you typically see that first start in after hours as the volume is low, and it's easier to pick that direction on where it's going to go. Hopefully that makes some sense to you guys. But we did see a stronger close in after hours, up 0.82%. So that is clearly a strong sign of what is to come on Monday. Now, what is really important to point out is that we had resistance levels at $26.50 and $28 per share, and we broke out cleanly past them. We closed at $29.12 in regular trading, up 24 cents in after hours. So that looks very good right there. Our next big level to be watching for, and if we break out straight past this, then the sky is literally the limit, because we showed a lot of resistance around this 200-day moving average. And this might be a little bit hard to see for some of you guys, but this is really this teal line right here, and that's sitting at $32.25 per share. I do expect a lot of resistance around there, and to ultimately, if I were to just totally throw a random oddball, estimate out there, I expect on Monday we'll probably gap up close to that, and probably even touch that a couple times, and then come back down a little bit, and then eventually by the end of the day to make a breakout above that, because I don't think all of this activity is just going to be shoved under the rug. I think you're going to see a lot of traders, a lot of FOMO buyers, and specifically after JP Morgan's article or statement they put out by the chief global market strategist calling out IWM and pretty much calling out AMC and other stocks that have extremely high short interests, saying that you basically have no reason to be shorting these stocks into the ground. They're going to see a rally here in the next couple of weeks. I think institutional investors, they're going to take that in as well and start buying these stocks, because it's clear to say they're in bear markets. Like, all mid caps are down 20%. Not, I shouldn't say all of them, but virtually all of them are down like 20%. So watch for that. Watch for the break above the 200-day moving average. Expect some resistance around there, as we did see in early December as well. As far as potential downside, watch that $26.50 level. To go down $3, that's going to be almost, what, a 10% move, damn near a 10% move down to $26.50. So I would watch that for some support. Watch the $28 level as well to see if we can stay above that. I think it'll be no problem staying above these levels, but still, for the bears out there, watch to see what happens with that. Now, as far as the Ortex data, we're looking at 20.33% short interest of free float. These are only estimates. We know the short interest is actually much higher than this. This goes without saying. Short interest is going to come in anywhere between 20 and 25% on the exchange reported short interest day. But we know the hedge funds, they use the option chain to make it look like they've covered on their short positions, when in all reality, they have not. Other than that, we have the share utilization at 79.43%. days to cover at 2.54 days to cover, and this is very important, and I'm going to talk about this many times, so I apologize if you watch all these videos and you hear this just a lot of times, many times. You have to watch the days to cover and the correlation between the stock, because this is the third time that we are seeing this correlation that may start to play out. What I mean by that is January days to cover was 2.3 days to cover. Stock went crazy, went up 10x. Days to cover shot straight back to virtually nothing. Days to cover went back up before the June rally and peaked out, what was this, May 12th, and then started to come down at a rapid rate, and then started to really come down at a rapid rate from 1.39 days to cover all the way down to half a day to cover when the June rally did happen, and we went up 10x in share value once again. And then we've seen the days to cover low for a very long time. Now we're at yearly all-time highs at 2.54 days to cover, and you see this slight tick down in days to cover as the share price is going up. So if this pattern stays true, we should see days to cover shoot down and the stock shoot up. And that's really what I expect to happen. I don't think it's going to stop correlating or discorrelating each other this time around. I just don't expect that to happen. So I do think this rally is going to continue. But that's really all you guys need to know from the Ortex data, from the technical analysis. You can get into these breakout patterns and all that. We know that doesn't work. We have to take a look at the data that we're talking about in this video. And that's really what's going to give you the gauge on what to expect, what's going to happen. As far as technicals is concerned, if you see people talking about all these breakout patterns, all this, it doesn't work. All you need to pay attention to, support, resistance, moving averages, and volume. And that's something that I do want to talk about as well that I didn't talk about. We did see 144 million shares that did trade hands, which is high, and I do expect that to stay pretty much the same in between 100 and 200 million shares that trade hands on Monday as well. It's not necessarily about what the volume is. If a lot of people are holding on to their shares, you can see big increases in share value with low volume. So it really doesn't give you a clear indication of what is going on. And you can see based off the volume and the move that we did see today, comparatively to the last 20% positive move we did get and the lower volume, that a lot of people are holding on to their shares now and really hodling compared to even what we've seen back in August. So we've seen 144 million shares that traded hands on Friday. We were up about 20%, including the after hours move, about 20%. The last 20% move we did see was back here August 24th. We went up 20.34%, but the volume was 225 million shares. That was what, rough math here, like 80 million less volume that we seen on Friday to cause the same move. And that is because people are holding on to their shares. It's harder to get hands on these shares for all the traders that are trying to trade AMC at the current moment. Now, exactly what caused Friday's move? This is going to be key, and this is going to lead into the next big catalyst for next week, and that is the Spider-Man movie. Now, I think there was a lot more that happened under this behind the scenes per se. No pun intended, happened behind the scenes because there was a lot of traders. There was a lot of people looking to trade the stock. And I don't necessarily think there was a lot of shorts that covered. We definitely didn't get any data that did suggest that. But when you have these traders that are in a stock like this, and specifically coming on Monday, when there is a lot of good things that happen on Monday for AMC, Monday is typically our best day, then that momentum just doesn't easily get killed. So Adam Aron's tweet, December 17th, that was obviously on Friday, just staggering Spider numbers. 1.1 million people watched the new Spider-Man movie at AMC theaters in the US yesterday. Biggest AMC opening day grosses for a December movie ever. Second biggest opening at AMC of all time. Biggest one-day sales for any movie in all of 2020 and 2021. And this is key. Second biggest opening at AMC of all time. AMC has been in business over 100 years. That's insane. And some people are saying, hey, why does AMC move up 20% on this news? Well, that's pretty damn big news. The second highest opening day in 100 years. That's insane. And that's just proving the bull case yet again for AMC. And considering AMC is down about 50% just from where it was back here, $45 per share in this range, it makes a lot of sense to be buying AMC. Not even based off of just the fundamental value, but your potential downside is much less at $29 than $45 per share. So the risk to reward ratio makes a lot of sense, makes a hell of a lot of sense in my personal opinion. Now, keep that in mind. What happened with Spider-Man? The big catalyst for next week is going to be The Matrix Resurrections. And we don't have any numbers on this pre-order sales or anything like that, but this movie comes out December 22nd. That is Wednesday. And I do think you're going to see that momentum Monday and Tuesday, and then coming on Wednesday, you're going to get numbers and some kind of announcements, well, Wednesday or Thursday on these numbers, which will give us another boost of excitement for AMC. Why? Because I have seen a lot of people in my personal life, right? My friends, my people around me that have been talking about they cannot wait to see this movie. I've been hearing people talk about The Matrix for months now, and I do expect this to be just as big, if not potentially bigger than Spider-Man. People want to go out. They want to do things. And if Spider-Man caused those kind of moves, if we see back-to-back movies that are doing exceptionally well to end Q4, I think that's going to be another reason for people to continue to buy AMC stock. And the last thing we must go over to wrap up this video is going to be the Stonko Tracker data, because we were seeing about 150,000 puts that were in the money on Thursday. We closed only 83 million puts that were in the money. So a lot of puts ran from into the money out of the money, essentially controlling about 8 million shares that had to be bought by market makers. And same thing on the call side. We only seen about 13,000 calls that were in the money on Thursday. Now we did close at 72,462 calls that were in the money. So that's an increase of about 6 million shares that had to be hedged for by the market makers on the call side, 8 million on the put side. So all in all, that's about 14 million shares, 15 million shares roughly that had to be hedged and bought by the market makers. Now, all of this hedging has to be done by Friday, if not on Monday morning. So I do think you will get that gap up effect on Monday just based off of the amount of shares the market makers have to buy to fully hedge for these contracts. Now, for next week, you're looking at 17,000 calls that are already in the money, 73,000 calls that are out of the money. I do expect once Monday comes around, and the Stonko Tracker data does actually update, there will be over 100,000, potentially 150,000 calls that are out of the money, and likely 30 to 50,000 calls that are in the money. And that's obviously going to cause even more hedging. Same thing on the put side, only 7,200 puts that are in the money, 52,000 puts that are out of the money, but the out of the money puts are substantially way out of the money. If you guys take a look at the option chain expiring next Friday, you can see if AMC went down to even $28 per share, $27 per share, there's a little bit over 1,000 puts that would run into the money. That's like virtually nothing, and that's really not going to move the needle whatsoever. To really see large amounts of puts that will start to run into the money, you have to get down to in between the $23 and the $20 strike, and I don't think that's going to happen. That would be a stupid big move to the downside, and just obviously it seems very likely right now. Whereas you do have a lot of the calls that are close to going into the money, specifically at the 30. You have at the $30 strike 6,700 for open interest, 2,500 for open interest at the 31, the 32, 2,000 for open interest, and then it's pretty substantial all the way to the $43 strike. So take this information however you guys want. Do what you guys want to do with it. I am not a financial advisor. I am not a financial planner, but this is the data and what is speaking to me. I do think next week will be a very bullish week for AMC, and we could get in either a chill out effect, or we're going to get the next leg up into the MOAS, because this is not all going to happen all at once. In all reality, I want to see AMC at $50, $60 before you see the shorts actually start to cover. And with this egotistical battle we have going on right now, I think that's going to be the case. They're not going to want to cover until they literally are forced to cover. So that's going to be all for this video. Hit the like button for me if you guys found value out of it. If you're buying AMC, if you're holding AMC, if you have not sold a single share, hit the like button for me. Let me know how you guys feel about AMC. Consider subscribing to the channel. Let me know in the comment section any thoughts or questions you guys have on this video. Love and appreciate you guys. Thanks for watching this video. I will see you in the next one.